Let's now move on to another aspect of the markets in Africa. Joining us for a look at what's moving markets in Namibia this time is Kirsten Günzel, research analyst at IJG Securities. Many thanks for coming on, Kirsten. I want to start off with your general view on the indices today. There's been quite a mixed bag of results.
Hello, Larry. Yeah, that's correct. We just released our monthly asset performance, and it shows that the NSX local index ended at a higher level of 235.13, up 0.32% from last month. Now, this is in contrast to the overall index, which dropped by 5.62% over the month. The IJG All Bond Index advanced only marginally by 0.05% at a level of 132.66. Now, given the current exchange rate, if we look at this index return month on month in US dollar terms, the returns were negative by 8.71%. Now,
0.71%. Now, year on year, the index advanced by 11.27%, and the 10-year return showed 12.41 in Namibia dollar terms. Now, the last month showed some declining yields of the bonds, but we hope that this will improve over the next couple of months.
All right.
Now, the IJG Money Market Index shows quite a linear...
All right.
Yes, Larry?
I want to talk about the weakening rand, which is a real concern down in Namibia right now, and this is affecting the returns.
I want to talk about the weakening rand, which is a real concern down in Namibia right now, and this is affecting the returns.
Yes, that is correct. Now, we are highly dependent on exports, and for those industries that depend on export, obviously the weaker rand has some advantages, but those industries that are dependent on inputs and would like a strong currency, now they suffer, obviously. But the currency has been volatile in the past. We will see how it develops.
Let's move on to the Namibian Stock Exchange, and we saw volumes hitting 3.1 million. What is driving activity there?
Yeah, we had a lot of F&B and First Rand shares trading, a lot of Anglo shares trading. Trusco shares were also quite volatile over the month. In total, 3.1 million shares traded during May at a value of 204 million Namibia dollars. The biggest gainer was Marinika Energy, which is quite surprising because it is actually quite a small uranium exploration company on our venture capital board. But they had a change in management. They have new strategies to conduct exploration. They have new methods to extract the uranium should this project come off. So this justifies actually the 10% increase in return in share price. Now, the worst performer was Deep Yellow, down 34.7%. This is clearly on the back of the weakening uranium price, and we are not sure when the uranium price will recover. So in future, Deep Yellow might improve again, but for the moment, weak uranium price puts quite a bit of pressure on the uranium stocks on our index.
Kirsten, we also saw results out of Trusco, which shows that the company has actually been growing for the last 5 years. Talk to us about that.
Yeah, Trusco released their financial results last week. Trusco is mainly involved in microfinance and education lending in that business. Now, over the last 5 years, they grew by a strong 34% on average. The increase in revenue over the last year, financial year 2011-12, was 22%, mainly on the back of good performance in the microfinance and education business here in Namibia. That business alone showed revenue increase of 25%, but profits reduced by 14% due to increasing cost in education materials. In South Africa, Trusco's business grew by 18%. Trusco faces continued challenges in their business in Zimbabwe with their partner Econet Wireless. There's a court case going with the outcome not quite clear yet. We will have to see how that develops. But should all things go well, that might be a strong growth factor in Trusco's performance.
Another interesting one is Forces, which says it will be able to boost its uranium reserves in Namibia by 30%. How will the market respond to that?
How will the market respond to that?
Valencia owns two main uranium deposits, which is Valencia and Namibia. Valencia already has a mining license, and with a reported stripping ratio of 1:1, which is obviously very good. Now, if they manage to consolidate the Valencia deposit with the Namibia deposit, they could boost their resource by 30%. Now, obviously, the development cost will increase through that because they would have to build a huge pit, but operating costs will be substantially lower. This is clearly an interesting development, and Forces shares, although they have fallen as the other uranium stocks, except now Marinica, the share price is not doing too well. My apologies. The share price is not doing too bad. It's now trading at 7.24 Namibia dollar.